You can make thousands in crypto profits and pay zero on taxes if you follow the strategies in this video. From taking advantage of a long-term capital gains tax rate to moving to a crypto tax-free country, these are the best strategies to pay zero on your taxes. Let's start with an example. Imagine that you invested $3,000 in Bitcoin in 2021 when one Bitcoin was worth $12,000. In 2023, it is worth $36,000, 3 times more than what you paid for it. Your $3,000 is now worth $9,000, registering a $6,000 profit. You can pay zero taxes on it. That leads us to our first strategy. Tip number 1. Hold crypto in the long term. One of the best ways to save on your crypto taxes or even pay zero on your taxes is to hold your crypto for at least 12 months before selling it. A lot of countries, including the US, have this type of benefit for crypto investors. This way, you can save a lot on crypto taxes. In the US, the long-term capital gains taxes can range from 0% to 20%. While, if you sold before holding for 12 months, you'd get taxed at a higher rate, ranging from 10% to 37%. In the previous example, you've held your Bitcoin for over 12 months before selling it, meaning you were entitled to a long-term tax rate. In 2023, if you made $44,625 or less, your capital gains tax rate would be 0%. Depending on your total income for the year, your capital gains tax rate will change. But if you're a long-term investor, there are other ways to save on your crypto taxes. Let's move to tip number 2. Set crypto in retirement accounts. If you're looking to save on your crypto taxes, you can look into retirement accounts like IRAs and Roth IRAs. These products now offer the option to include Bitcoin as one of the investment assets within your retirement accounts. Let's look at the differences between a Roth IRA and a traditional IRA. In a traditional IRA, you can make the yearly contributions, get a tax deduction, and only pay taxes when you withdraw your assets. At the time of the withdrawal, you'll be liable for income taxes, according to your total income tax bracket. The difference between a Roth IRA and a traditional IRA lies on the yearly contribution and its limits and the tax benefits. In a Roth IRA, you cannot take tax deductions while you contribute, but at the end, when you withdraw your crypto, you can get a tax-free rate. However, if you didn't invest in crypto through a retirement account like a Roth IRA and you make over $44,000 a year, there are other ways to save on your taxes. Tip number 3. Search for an income tax-free state in the US. If you are in the US, one of the best ways to save on your taxes is to move to an income tax-free state, effectively saving on your crypto taxes. Many of these states also offer other tax benefits for businesses and investors. Wyoming, Nevada, and Texas are some of the most crypto-friendly states in the US. They have all recently implemented measures to attract more crypto businesses and investors. All of these states have become crypto hubs with many advantages for crypto businesses, investors, miners, and even blockchain protocols. However, for US citizens, there are other options to save on your taxes. Let's move to tip number 4. Tip number 4. Donate your crypto to a charity. In the US, you can donate Bitcoin or any other cryptocurrency to a qualified charitable organization, get a tax deduction, and effectively reduce your crypto taxes. After you donate crypto to that organization, you can claim an itemized tax deduction on your tax return and lower your crypto taxes. When you donate crypto, if the current fair market value of your donation is higher than your cost basis, you can claim a tax deduction based on that FMV if you've held that crypto for more than 12 months. Otherwise, you can only deduct an amount up to your basis in the crypto. This is a great way to lower your capital gains taxes. However, there's another move, a bit more drastic, that can lead you to pay zero taxes on your crypto. Let's move to our last tip. Tip number 5. Move to a crypto tax-friendly country. This may seem radical, but there are countries out there that do not tax cryptocurrencies or offer a 0% tax rate for long-term investors. For example, countries like Portugal or Germany offer long-term investors a 0% tax rate on their crypto profits. You only need to hold your crypto for over 12 months before selling it. Other countries offer benefits like no capital gains taxes or no income taxes for crypto investors if you follow certain requirements. Examples of these countries are El Salvador, the UAE, Bermuda, the Cayman Islands, Malta, and many others. However, we always advise for people to search for crypto tax professionals that can evaluate your personal situation and offer you the best advice. There's an extra tip. You can deduct your crypto losses from your other gains and reduce your taxes. This is another way to save on your taxes that's available in most countries. If you have crypto losses, you can deduct them from your other capital gains and effectively reduce your total crypto taxes. For example, in the US, in crypto, there are no wash sale rule, which means that you can realize a tax loss while buying back immediately the same asset. This is a good way to save on your taxes. The best way to track your losses and gains is automatically with crypto tax software like CoinTracking. If you want to learn more about these tax saving strategies, please check the guides in the video description. Happy tax saving! If you like the video, please leave us a like, share and subscribe to the channel. If you like this type of tax videos, we have a bunch of them on our channel. We encourage you to check them out.